Good morning, and welcome to AI Daily for Wednesday, July 15th, 2026. I'm your host. Today, the AI chip world split cleanly in two. In Asia, one of the most important companies in the entire AI supply chain just had the worst day in its history, and it started with a single research note. In the United States, chip stocks did almost exactly the opposite. We'll walk through that whiplash in full. Then, OpenAI's striking offer to hand the U.S. government a stake worth tens of billions of dollars, a Chinese robot maker clearing the runway for a major IPO, the first Nvidia H200 chips arriving in China, record numbers out of Taiwan, and what to watch tomorrow. One note before we start. There is no brand new frontier model to report in the last 24 hours, so we're skipping the model segment today rather than pad it. Let's get into it. Our headline is a market shock out of South Korea. Shares of SK Hynix, the world's leading maker of high-bandwidth memory, the specialized chips that sit next to every AI accelerator, plunged around 15% on Monday, July 13th. According to yfinance data, that is the steepest single-day fall in the company's history. Rival Samsung Electronics dropped nearly 11%, and the benchmark Kospi index sank roughly 9%. An intraday move large enough to trigger an automatic trading halt. And here is the part that should stop you. The trigger was not an earnings miss or a factory fire. It was a single research note. The Korean brokerage KIS published a second quarter profit estimate for SK Hynix about 8% below the market consensus, warning that shipments of HBM4, the next generation of high-bandwidth memory that AI chips are desperate for, are running slower than expected, and that the company leans very heavily on those contracts. That was enough. After a monster rally this year, traders rushed for the exits, and the selling rippled outward. We'll put real numbers on the damage and on the very different mood in the United States in Market Watch. Over in the corporate world, one debate keeps getting louder. OpenAI has floated an unusual idea: hand the U.S. government an equity stake in the company itself. The reported structure would give Washington roughly 5% of OpenAI, worth about $42.6 billion at the company's most recent private valuation of $852 billion, modeled loosely on a sovereign wealth fund that could pay dividends back to the public. It is still a proposal, not a signed deal, and it would raise thorny questions about a government owning a piece of a company it also regulates. But it has clearly struck a nerve. A survey circulating this week found that 69% of U.S. workers support requiring large AI firms to move some of their stock into a public wealth fund, as anxiety about AI-driven job losses keeps climbing. Whatever you think of the mechanics, the fact that a plan to partly nationalize AI upside is being discussed at all tells you how high the stakes have gotten. Staying with companies, and on our China and robotics beat. Unitree Robotics, the Hangzhou-based maker of humanoid and four-legged robots, has cleared the final regulatory hurdle for a major public listing. China's securities regulator approved Unitree's plan to raise about 4.2 billion yuan, or roughly $619 million, on Shanghai's Star Market. For context, Unitree reported revenue of about 1.7 billion yuan last year, around $250 million, with a net profit near $41 million. So this is a profitable hardware company, not a cash-burning moonshot. Management says the proceeds will fund robot AI models, new robot bodies, and a smart manufacturing base. The approval is valid for 12 months, which means one of China's best-known robotics names now has a clear window to go public and pour fresh capital into the humanoid race. On the policy front, the long fight over AI chip exports to China took a concrete turn. At a U.S. House committee hearing on Tuesday, July 14th, the Commerce Department's Undersecretary for Industry and Security confirmed that the first shipments of Nvidia's H200 chips have actually started reaching China. The important caveat: the volume is tiny so far, described as only a handful of chips arriving in China and Hong Kong. This follows approvals for around 10 Chinese companies, reportedly including Alibaba, Tencent, ByteDance, and JD.com, to buy the hardware under tightly controlled conditions. It is a notable shift from the near-total blockade of recent years, and a reminder that export policy is now being tuned chip by chip. Also on Capitol Hill the same day, the Senate Judiciary Committee took up a thornier long-term question: how patent law should treat inventions created with, or by, artificial intelligence. No conclusions yet, but it is a signal that the intellectual property fight over AI is moving from the courts toward Congress. Now to the split screen, with real numbers, and the usual reminder that this is context, not investment advice. Start with the pain in Asia. On Monday's close, Samsung Electronics fell about 10.7% and SK Hynix dropped about 15.4% per yfinance, and the memory weakness spread to U.S.-listed names like Micron and Western Digital. But on Tuesday in the United States, the mood flipped. Nvidia closed up about 4% at around $212. AMD gained roughly 2.5%, and Broadcom and Alphabet both rose, helped by cooler-than-expected inflation data and that news of H200 chips heading to China. The clearest read here is that the market is separating memory chips from AI logic and accelerators. Worries about oversupply and pricing in memory did not stop investors from bidding up the companies that design the AI brains. And one more record from the supply chain. Taiwan's TSMC reported June revenue up almost 68% from a year earlier, with first-half revenue up more than 35%, as AI chip demand keeps running hot. Finally, what to watch next? The biggest scheduled event is TSMC's full second-quarter earnings report, expected on Thursday, July 16th, after its monthly numbers were pushed back by a typhoon that closed Taipei's markets. Given the record June revenue, the guidance and the AI demand commentary on that call will move the whole chip sector, memory names very much included. Then look to Friday, July 17th, a genuinely busy day. Shanghai hosts the opening of its big World AI Conference, a showcase for China's fast-moving model and robotics scene. And Google is widely reported to be lining up the launch of its next flagship, Gemini 3.5 Pro, with a very large context window. And of course, everyone will be watching whether Monday's memory chip panic was a one-day shock or the start of something bigger. That is your briefing for today. Thanks for watching AI Daily. That's AI Daily for July 15th. Quick recap. SK Hynix suffered its worst single-day crash on record on a single bearish note about HBM4 memory. Samsung and the Kospi tumbled with it. Yet U.S. chipmakers rallied as the first H200S reached China. OpenAI is floating a government stake. Unitree cleared its robot IPO, and TSMC posted record June revenue. Every figure today was checked against primary sources, and all stock moves come from yfinance. Nothing here is investment advice. If this briefing saved you time, subscribe so you catch tomorrow's same time every morning. See you then.